What is up, guys? Taiki here, and welcome to episode 1 of the Crypto Market Wizards podcast. Today, I have here with me Eric from CMSHoldings. How are you doing today?
I'm good, man. Thanks for having me.
Yeah, so can you tell your audience, or can you tell our audience what you do for a living? Just general background.
Yeah, so I'm a trader at CMSHoldings. So it's both liquid and VC prop firm, and my main job is to trade the liquid markets in particular. I do some VC stuff where I'm more like subject matter expert in like specific DeFi matters, but I mainly focus on the liquid side.
Cool. So do they like basically just give you money, and as long as the chart is going up and to the right, like they're just like happy with you?
Yeah. As long as the number's going up, it's all good, I guess.
So fair to say that number has been going up and to the right recently.
I mean, yeah, like the Bitcoin market is up like 50, 60% this year. So like, even though I guess certain alts aren't, I guess, or most alts aren't, and Bitcoin dominance is increasing, like there are pockets of opportunities here and there.
Yeah, so Bitcoin dominance has been on a rampage this year. It's above over 50%. And like you said, like most alts have been suffering. How do you think about the landscape of the broader altcoin market? And where do you find these pockets of opportunity?
I mean, in general, like you see a lot of alts dying. Probably it's a combination of like, so they raised in 2021, right? Usually you raise for like 2-year runway. So it's coming to the end, and then they're unable to raise at the values they were raising at in 2021. Just when interest rates are 0% versus 6%, people like VC a lot less, right? So just money doesn't go as far, and a lot of these teams that are raised or have tokens are unable to sell them at the values they were. And also you have the market cap versus fully diluted market cap. So you have a lot of supply coming in and not a lot of bids, which is why most of the altcoins that have such a market structure, I guess, where it's the ratio between market cap and fully diluted is so high, are like straight line down, versus something like the majors, whereas like ETH and Bitcoin, basically like Bitcoin inflation, like 2% a year. ETH, I mean, they have the deflationary meme, but like still around like 1-2% inflation based on like current like gas numbers. It's nothing compared to like some of these alts, which are like 10, 20%, 30 even annual inflation, right? So just it's basically an economics like supply and demand problem, and on one side, and then an intention problem on the other side. Everyone knows Bitcoin, ETH, and people are very apathetic with the market. Just look at like any Google trends, like they're all like down, right? So you have low attention for alts, relatively a lot more attention for Bitcoin and ETH, and also a lot more supply coming in for alts and a lot less supply coming in for Bitcoin and ETH, which is why the charts look as they do.
Yeah, I can definitely feel the apathy, like from a content perspective. Like my viewership has been down only since the beginning of 2022. And I think like at the Pico top, I had like 95, 96K subscribers, and now I'm like 91K. So like every time I upload a video, I lose subscribers, and you definitely feel like that.
They remember it in crypto, and they're like, "Nah, yo."
Yeah, no, exactly. It's like, oh, like Taiki upload a video. Oh, like this is a crypto guy. Like fuck this guy. Like I'm out. Like I'm pretty sure like that's how a lot of people think.
My portfolio holdings out, down. Okay, we out.
Yeah. It's hard to blame them though, right? It's like, given everything that's happened in the past 2 years, it's like crypto does seem kind of scammy. And like all these VC tokens, they keep unlocking, number keeps going down. The ETH ratio, or like the Bitcoin ratio, keeps going down. Like, how do you think about? I mean, you mentioned that you mostly trade liquid markets, even though your firm does some VC. Like, do you have any takes on trading liquid markets versus like going for VCs? Like, any hot takes there?
I mean, I would say I'm particularly pretty biased towards liquid. I am a liquid trader. I think in general, specifically in crypto, it's kind of like screwed. Basically, it's really inverse compared to the regular market. So traditional finance, the hedge funds, like the multi-manager platforms, though are a lot larger than the VCs. And the pension funds in the 401ks are even larger than those hedge funds. So this creates a pipeline where like the best VC projects exit to the public markets where hedge funds buy and then public buy. All right. In crypto, this is reversed. For every like 1 billion VC raised, how much is liquid? Like off the top of my head, the largest like liquid raise I even heard about was probably like Hashkey 100 million. And then like maybe Polychain has something in there. But like, and then you just hear like 1 bill, 2 bill, 3 bill VC raises, right? So you have VC like shoveling money. And then who are they exiting on? Like they have to sell. Like they have to return money to customers. So they have to sell. But like, then where does the money come from? Like some people are doing like in kind exits, like Multicoin with Sol, but then they're just leaving the selling to worse people. Like Multicoin's probably better at selling from like a not impacting price standpoint than like your average LP who gets these Sol tokens and have no idea what they're doing, right? Mm-hmm. Like the VCs are already the largest players. That's why like some of these charts specifically look down only. They're just like not new marginal buyers. And it's just like the dynamic of the marketplace. Like for there to be a new buyer, it has to, it's going to be like retail or like liquid, but like they make a lot less. So the only way they make is if like Bitcoin or ETH goes up, which is why like you have these cycles of like, oh, everyone has money now. Bitcoin is and ETH are up. Okay, we have money to buy these alts, which is why like it's like Bitcoin and ETH or like the majors like rise first, and then like you see that trickle down in like alts and stuff. It just, there's too much relative money in VC versus liquid, and it's actually like double adversarial. It's like the game theory prison dilemma. It's like -3, where like both VC and liquid suffer.
Yeah,
I fully believe that like, yeah, if the money in VC was in liquid, this would be a lot better dynamic.
Yeah,
I mean, like, hopefully, like I like talked to someone like trying to switch their mandates, but like it's hard. And then, I mean, the alternative is like IPO or like straight ICOs, which is like a lot of scams there. So like, but like, there's probably some like right now we're on like two ends of the barbell approach. Like there's probably something in the middle that's like better.
Yeah, like I think there are a few funds that's raising money to trade liquid markets. I know Defiance, like Arthur0x. I think he's focused on like the liquid markets. Some VCs or some fund managers say that there are like now more opportunities in liquid markets than in the private markets. And you know, you did mention an interesting point around, you know, Bitcoin and Ether goes up and then, you know, it creates a wealth effect and then people feel comfortable buying alts. And you said you primarily focus on like the liquid altcoin market. Isn't there like an argument to be made for you to like just stay out of the altcoin market and wait for Bitcoin and Ether to go up? Or do you think you have enough edge to just like catch? Like...
It's definitely easier when everything's going up. Like,
yeah.
Like, I mean, there were times in DeFi summer, like the longer, like you just throw a dart as long as it didn't rug, it went up. And you shouldn't even sell because the longer you held, the more you made. Like, yeah. When money is flowing, and there are many metrics to tell this, like stablecoin, like inflows look like it's like hiked, right? Like charts just look, like Google Trend charts go exponential. Funding rates, you can't fake funding rates. Those go to like ETH to Bitcoin have been like 20-30%, right? Like there are like clear times of exuberance. That's like, it's very easy, but that doesn't mean that there's not opportunity in every other time. Like you can't like, okay, so like, yeah, there's one theory where like you pack it up and come back in like 3 years when that happens, right? Or like or when it happens. I'm not putting a timeline on it, but there's another theory where like, okay, what if you can make money now when it's hard? Like imagine like playing in the NBA and then going to college. Like, wouldn't you just be better then? Right? Like hone your skills here and then like just be mindful of the entire market change. But yeah, like I still believe it's positive to be in the game, especially from not only from a P&L standpoint, but from a honing your skills, making rational decisions, because decisions here are arguably a lot, like undeniably a lot harder than 2 years ago.
Yeah, the NBA to the college basketball analogy is pretty interesting. It's like, because right now it's the NBA, right? It's like people say it's PvP, it's pretty hard, pretty competitive. But if you hone your skills in the NBA and you go to, I don't know, you play some D3 division, like whatever, you're going to score like 60 points, right? It's just inevitable.
That
so I
would be my
definitely,
counter argument.
yeah. So let's talk about those opportunities. So, right now I'm wearing the maker bull shirt, and I brought this up in my other YouTube videos, but let me give our audience a little bit of background. So Eric and I were both maker bulls. We're in this Telegram chat, and Eric told me, hey, like Taiki, I bought this shirt. He sent me a link to it. I was like, oh, like if Eric bought it, like I need to buy it. So I bought it. And like, where's your shirt, Eric? Like, did you get rugged? Like, what happened?
In real life, rugs do hit the hardest. To be determined.
But you actually paid for them, right? Like it just like never came.
Yes, the shirt
Interesting.
is NIA or MIA. Yes.
Interesting. But let's talk about Maker. I asked my audience, like ask questions to Eric, and I got a bunch of like RWA related questions. And I think you and I, like we both understand the Maker trade. They own over $2.5 billion worth of treasuries. The rates are going to stay higher for longer. Makes a bunch of money, buybacks, etc. Like, how do you like determine like basically like let me rephrase this. Like, how do you like like what kind of metrics do you look at? Like, how do you build conviction? How do you size these trades? And like, what did you see in Maker that made you want to say, you know what, like I'm going to go along like this extremely hated asset?
Very hated.
Yeah, very hated.
My God. Yeah, I think there are many parts of that question. I'm probably going to forget a few. So
just generally.
But in general, I would say I'm a user first of these apps. So I've used like most of the DeFi apps. Like you go on CoinGecko, like top 500. I've probably used most of them. So with this comes like custom KPIs, right? Like I remember in DeFi summer, everyone's like, yo, TVL. That's the only thing that matters. Or that's like the easiest metric that matters, right? TVL don't really matter. Like first of all, is it incentivized TVL? Is it non-incentivized, right? Like how much money are you actually making on that TVL and stuff, right? Like DEX is, okay, you got a lot of TVL, you ain't making anything, right? Maker, you got a lot of TVL, oh, you're making money with that. That's very different, right? So I would say the custom KPIs that I create, it help a lot. So like Maker, let's just take the Maker example, right? It's pretty simple. Maker just clips yield. Stablecoin doesn't really do anything other than stay stable. So make sure it's stable. And then how much yield are you clipping? So it's future revenues minus like expenses, right? So like projected increase in rate hikes, and then make sure that DAI supply isn't dropping. And then just like map it out. So I like wrote more about it in mine. Well, we can like briefly talk about it here. Yeah, I mean, there's supposed to be like 2 more rate hike increases, so that's bullish for the yield. The DAI supply has been dropping, but has recently like stopped dropping, and like you have to look at like the DAI holders and where are they, right? So like I think like the Hex dude owns like 15%, like because DAI can't be frozen. A lot of like it's like a lot of it's stuck DAI. There's like stuff in like the 3 curve vault because like USDC and USDT can be frozen. And I think like another 10% is like from hacks. So like that's like 25% that's like super sticky. And then you just have like a lot in bridges also. And a lot of the DAI hasn't really moved. And then you have the SDAI vault getting a lot. So basically the DAI supply stopped dropping. It was probably like going to increase. And then you just look at the yields. There's been 2 arrangers so far, and one of them is actually like really bad at clipping yields. Like Montalis, Clydeside or whatever.
Clydesdale, yeah.
They don't really understand like yield optimization. Like these dudes were in like treasury ETFs, and then they recently just moved the treasuries, but like the treasuries expired, right? So you have to roll the treasuries, and these dudes just don't know how to roll for some reason. It's like very low hanging fruit that like people are finally calling them out on. So the yield is actually going to increase from here, like quite substantially. Because they're just getting their ducks straight. So then you have other things that are just like easy optimization things that I think right now when I wrote the blog, I think it was like 140 mil revenues and like 40 mil expenses, and I think that can get to like 180 mil revenues and like 30 mil expenses. So just like having to go through like each line and individually and like seeing where the money comes from, how much is being spent, and where like, and then seeing like potential increases next year and decreases, and the increases far outweigh the decreases. Again, many low hanging fruit, like for instance Coinbase, they have like 500 mil part in Coinbase, but that's clipping like 2.6%.
It's 3%
been
now.
okay, yeah. Okay, I think they just increased at 3%. Like, dude, I can park money in Coinbase right now and get 5%. Like, just change the accounts.
I know. I don't really know why they're not doing that. I think they're pressuring Coinbase.
It's just like these like small things which can like actually like are very simple to do, and they're starting to do it now. Like, people are like yelling at the Clyde people.
They're getting a lot of pressure
and stuff, but like previously they weren't, right? And last year when they weren't, I calculated at 140, right? So this year with the rate hikes and everyone like paying attention and stuff, I just estimate like even higher, right? So like you just like take like how much you project, and then expenses wise, it was 40 mil last year in expenses. But like there's a lot of like dudes who aren't doing shit, a lot of like governance grifters. So people are starting to pay attention, call them out. I think like one of the people, I think like Deco or something, they were supposed to like fix rates, make like 2 mil a year, and there hasn't been any updates in like 2 years, and like their like sub Discord thing and the Discord is down, so people like yell at them, and then they finally posted after 2 years because people yell at them. So hopefully like that'll get cut. But just like stuff like that, just more paying attention, more optimization. So like let's just say like you predict like, so I predicted like 150 mil next year, right? So then you just take the market cap, you have to, and then you just create a simple PE metric. Like I don't like using PE because like it's very like TradFi metric, but at like some point cheap is cheap.
Yeah.
And like, yeah, it's cheap. And then like this is not even to mention like the like end game stuff, like new token split.
Yeah. Let me ask you about the end game.
All very bullish stuff. Yeah.
So end game, for those unaware, around Q1 or Q2 of next year, Maker and DAI, they're going to rebrand. There's going to be a 12,000 to 1 token split for Maker. And there are going to be a bunch of these new tokens for these sub DAOs. And in order for token distribution, in order for those tokens to hit the supply, the only way to farm them is by either staking Maker or the new governance token, or staking the new stablecoin, or like DAI is like what we know now. And I have mixed feelings on this. I think as a Maker holder, I kind of like that this thing is happening in Q1/Q2 because there's a lot of like salty news events in crypto, but if it's like 3-6 months away, it's like, okay, like the market can look forward to it. And I think it disincentivizes selling to some extent. And with millions of buybacks happening every couple of weeks, I think Maker ETH, we both agree with like the Maker ETH parity meme, right? Like 1 Maker equals 1 ETH parity.
I don't like the price targets, but like yeah, I gave that one.
Yeah, it's a good meme for sure. Just because Maker ETH has been a poster child of like DeFi underperformance. So for Maker ETH to get to 1,
famous,
yeah. So I think that's a good meme. But I think last time we talked, you mentioned that you're going to hold Maker into endgame.
Yeah, I mean, generally like new chart always. Like token split, like just removing the like bias, right? Like from like 1 point, like above $1,000, right, to like sub $1, like love it. New chart, like that chart looks ugly. New chart, love it, right? Like new coin name. Yeah, ideally something like earlier in the alphabet, so you just like see it earlier. Like I remember like Len split to like Ave, like they made like 2 A's. I was like, dude, fucking brilliant. Literally always first.
Yeah.
Then they're like reverse tokens when the price went higher, so like that was a whack. But I mean the price still shot up afterwards. But yeah. In general, like those things, like even in TradFi, right? Like tokens like bullish. Like you can just like historically backtest these things. Yeah. So I see no reason why it would be like very different in crypto. And then you have like all these like yield farming activities, right? Like historically just 1 token going to many tokens, bullish. Many tokens going to 1 token. It's actually only happened a few times. Ferrari, but I've never seen a more bearish thing in my life. Like that's ridiculous. So
Yeah.
just like historic, like again, like the maker end game details like keep changing and stuff because like it's still a work in progress. So I don't exactly know how um it's going to look like finalized version, but just from a bird's eye view, like it seems like pretty bullish. Like you farm with existing tokens, so token incentives farming, it's always been good, and just a lot of things that make me lean to hold. But again, like subject to change based on like the finalized details.
Yeah. So obviously, like Maker is under this umbrella of like the real world asset sector. RWAs, I kind of focus on tokenized treasuries. I think I'm like less bullish on like the other RWA sectors like real world
Well,
lending,
you
tokenized
have
watches.
reason to be like, I mean, wasn't there was one where like it was like some like Nigerian like bike thing that like led to
Yeah, they
like
rugged
you
like
go on the
5 million
bike
or
thing and like
something.
the boat rugged. I forget which protocol that was.
I think it was like Centrifuge
Goldfinch or Center
or yeah,
whatever.
Goldfinch. Yeah, either or.
Yeah, like I mean, especially when rates are like 6%, don't do anything else. Just stop.
Yeah, yeah. Despite
Like the
T-bills, right?
marginal like you get is like it's not worth, right? And then you have to think like who you lending to, right? Like why can't you get a traditional loan? Like no offense, but like if you're getting a crypto loan, like that means you can't get a traditional one. Like
Yeah.
it depends on like the specific like thing you're building, but like in general, like the Nigerian like bike scooters, like bro.
I know. I think that was like paying like 15% or something. It's like there's no way
Yeah,
that's worth.
yeah. So it's just like you're just getting the worst of both worlds, right? It's a super negative selection bias, right?
Yeah.
So then it's like, that shit probably not gonna work.
Yeah. Like where do you think we are in like the RWA narrative? Because for me, like I think it's inevitable. It's inevitable. I think in this high rate environment, the only way capital stays in crypto or like DeFi is if we can tokenize these yields on chain, and then we can build financial products on top, enhance those yields and whatnot. But whenever I post bullish things about RWAs, I get pushback. It's like, oh, like this is not DeFi. It's a rug. It's a scam.
Yeah.
Where are you on that?
Yeah. People like to live in like this like idealized world, but they like forget that economic incentives are very powerful. Basically, when the yields were 0% or like 0.5% and like Circle was clipping that, no one said anything because they were like, yo, Circle's getting 50 bips to move like tokens on chain, right? Like they deserve that, right? But now that it's like 650 bips, people are like, yo, Circle ain't deserve 6%. Fuck that, right? And then so they're doing it themselves, right? And until that bridge gets gapped, like I don't know like what it is, but like you have like a lot of like people trying to like launch new like yield products, right? So like you have like Canto, which is a very popular one, and then like USDM, another one.
Yeah,
it just
there's
like
like Ondo and
that gap just needs to be bridged in order for capital to stay in DeFi. Like you have like just going like Aave, right? And like USDC deposit 2%,
yeah,
USDC borrow
it's so sad.
3%. Like that's probably people who don't have access to the American system, but like it just smart contract risk should be higher than shoving it in T-bills. Period. Full stop. Like there needs to be better. Like we just need to be better.
Yeah, and like I feel like if the risk-free rate on chain gets like 5-6%, then it should increase like the lending rates, the borrow rates across the board, which should benefit everyone. So I feel like that's one of the only bull cases for DeFi that I see. And you mentioned Canto earlier. I got some questions around Canto as well. What are your thoughts on there? Because I think it had a crazy hype cycle Q1 of this year. It nuked, it retraced everything and a lot more. And now, it's getting some attention. What do you think of their RWA or like RWA strategy, like Neo Finance?
I mean, I like it. Like I don't know how how familiar people are with it. So
I think my viewers
big
are
background here.
aware with it because I've talked about it a few
Okay.
times.
Yeah. Basically, uh, I mean, it's just doing the same thing that like everything else is just bringing the yield closer from 0 to 5-6%, just closer to what the regular yield is. I mean, yeah,
and they're like inflating tokens on top.
We'll see how much like TVL they get, right? Like TVL is a very good metric when you're just clipping yields.
Yeah, I agree. Yeah, for stablecoin projects,
borrow lending or like dexing, right? But like for clipping yields, that's a very good metric. So yeah, like they have their own, or they're making their own like ZK bridge
L2,
thing with Polygon now. And yeah, they're working with like people to bring real yield on chain. So yeah, like to be determined, but like again, pretty bullish on the entire concept.
Gotcha. Like, how do you determine like risks though? Because one of the pushbacks against RWAs is, well, it's illegal, right? It's like you're bringing like TVL yields to
like I'm
non-KYC.
not a lawyer or anything, right? So like I won't get into that argument, but I mean, like for like specifically to participate in the Canto one, like you have to be like KYC and like you have to pass a bunch of checks. I think one of them like hash key or something is like hash note or something.
There's hash note and Fortunify.
Yeah. I think like one of them is from like the RW, which is probably one of the remaining like ODC market maker desks. So I would say they know more than me, and if they're passing it, like who am I to say that you can or cannot?
Okay, so you think that the regulatory risks around like the government seizing assets, it's like overestimated, or like maybe people on Twitter are like just zealous and like they're just like,
I mean, people on Twitter are always like that, right?
yeah.
Like they just like, yeah. I mean, they're always people on Twitter. I mean, that's what they do.
Yeah, it's good for engagement,
yeah.
Okay, so all right, so we talked enough about RWAs. Let's pivot to these two other coins that you're bullish on, and which is like Solana and dYdX. But I kind of want to pivot the conversation, like not focused on the tokens themselves, but talking more around unlocks, because dYdX obviously has those huge unlocks happening in December, where roughly, let me just share my screen here.
I think the dYdX one is 30% of investor plus whatchamacall team gets unlocked, right?
Yeah, there's a bunch. Like, whatever the numbers are, it's going to be a lot.
Yeah, I mean, so we're VC investors also, so we have dYdX, so
yeah,
I'm like pretty familiar with the specific
unlocks.
But yeah.
And then with Solana, DeFi Squared had this interesting post on it around, the FTX estate holding over $1 billion, etc.
He ain't wrong about that.
Like I understand like you being bullish Solana and dYdX. I mean, I totally understand like the thesis there, but knowing that these unlocks are happening, like, what makes you like why not buy later? Like how do you determine?
That's totally that's totally fair. The best opportunity is probably in the midst of the unlocks, not actually at the bottom or the top. Like, but also it's really flow dependent. Like for reference, do you remember like when Maker, I think like AZ16 was just dumping 30 mil.
Yeah.
Like you can take this thing, let's say like unlocks, right? Like 30 mil would be 3% unlock, right, at $1 billion market cap, right? And they were just nuking that every day. I think it was more like 40. No, like 4% unlock, right? It went up.
Yeah, it kept going up.
Like
it actually dumped after they started.
It's not like it's flows more than unlocks. Like there's like unlocks you just assume are sell, but that's not necessarily true. Okay, for the Galaxy case, it might actually be. The dYdX case to be determined, right? So, but like people think of unlocks in this like very negative light. For what it's worth, the first Sol unlock, if you remember, from like 2020.
But that's during the bull market, though, right?
I mean, that was before. I would say that was like before the real bull market, but like it ran. So like I think unlocks is more nuanced. It's more flows and it's supply versus demand. The real answer is probably that I guess it's like super nuanced. So we can take dYdX. Let's just take dYdX and talk about that. For dYdX in particular, it'll finally start clipping yield.
Yeah.
So I project about like 2 billion in volume, maybe, with like if you clip like 3 to 4% basis points, like the yield's gonna be like 50%. Like it depends on how much people are staking. Like let's say like 33 to 50%. If you're a like fund or like just a token holder and your mandate is to be long, tell me what else makes that.
Yeah,
like you just like there's like I mean, just as like a VC investor myself, like yeah, if you have to sell, you have to sell. Like I can't say anything about that. But else, you sit there, you stake it, and you make 30% to 50%. So why am I selling?
I see.
The lower the price goes, the higher the yield is. So okay, let's say it nukes. Oh, now the yield is 80%. Like, what do you want me to say? Like, I don't know. Like, yeah, okay, I'll just buy more. Like, yeah, like they're unlocks. I project that the yield is higher, and the people don't sell, and if they do, the yield's gonna be even higher than that.
I see. So do you just think that people are unaware? Like, do you think people over-index like the unlock thing too much? But like in reality,
flows because they don't understand the buys, right? Like the maker example was a perfect example. Like also like, so I remember Lido last year. I think it bottomed at like 0.8 or something. Everyone was like, "Yo, unlocks," and just kept on nuking and nuking and nuking. But the unlocks continued all this year, and it's like well above that price. Granted, like it's down a lot. It's like its highs, but like still, like when people realize, they're like, "Oh shit, it's way too cheap." Like unlocks, like initial unlocks are like, yeah, like if the flows don't get there, sometimes they do, maker, sometimes they don't, Lido. But then people realize and they're like, yo, and they just start bidding. So yeah, like it could go down first. I'm not saying it. I'm not like, I don't know. So, all I know is like, I've projected these yields, and if it goes lower, the yields go higher.
Yeah, so it definitely feels like you're like fundamentally driven. You have a pretty medium to longer term time horizon.
Yeah, I mean, the way to do it if you have a short term time horizon is first of all you could hedge, right? So like a perfect example is GMX. Like you look at like fundamental metrics of like dYdX, they're like it's not even close compared to the other ones. GMX would be the second largest market cap, so let's just talk about GMX. dYdX has like 10 times more volumes. Its fees are like 75% lower. The only reason you use GMX is to farm the Arbitrum airdrop, like full stop. GMX sucks. Like it's just a bad product. And so like you can look like from the Arbitrum airdrop till now, and you can just run a dYdX GMX chart, like a relative value chart. I mean, it's just
like
up and
down
down,
only.
Right? Now, granted, they just got some like they might get some like Arbitrum incentive stuff, but like, yeah, that's a spike. You just like, yeah, just throw on the spread. Like for GMX to outperform Arbitrum or dYdX, like.
Yeah, the V2 has to get real adoption, which, you know.
I mean, yeah. Yeah, just like if you want more short term and you're like unfair to unlock, yeah, just like put on like spreads like that, right? Like the maker ETH spread, I always like more than just the maker trade because you can just double your maker size or something, right? Like, especially in like this regime, right, where like it's super choppy. Like, for reference, my background is a relative value like gold macro trader, so like gold, silver, ES, NQ is what I did. So I actually always default think in these terms, and the only like way I like don't is if like you have like huge bull factor like indicators like stablecoin inflows going up, right? Like funding rates like 40% or something, right? Like, but like in general, my default is always relative value, and like that's how I think, and that's how I approach these. So like I just like okay, perp dex, right? Like it makes a shitload of money in centralized. It's probably gonna make money in decentralized, right? All right, what is clearly better than the rest? All right, take relative values, metrics, flows, right? So KPIs, make your own metrics, and then flows, the unlocks and stuff like that. How much buying, how much yield, and then you look at other products like that, right? So like GMX, GNS, like stuff like that. So I would say a better trade, if you're worried about like the specific unlocks, is probably looking at like a dYdX GMX spread or something like that.
That makes sense. Yeah. So is it fair to say that, generally you have a basket of coins that you like, you're very long, and then if you want to hedge, you like just short another related coin in the same sector that you think is overvalued relative to like
It
what you're
doesn't have to be
bullish
the
on?
same sector, but yeah, like like another popular one is like Lido or Rocket Pool the unlocks, right? So like, but like or the unstaking, Shanghai update. But like it was very clear that the entire sector was just going to take off, right? So in that, but like in that case, like what is it against? It's against ETH, right? So ETH gets unstaked, so potentially there's sell pressure or a restaking pressure, right? But there's not new buying pressure, right? So like then you would do Lido ETH or Rocket Pool ETH, right? Like it doesn't have to be the same sector, but like, you see what I mean, right? Like some like related kind of thing. Like Maker, I didn't really short like they were Frax, I guess. I don't know. Like even though like it's just more nuanced than that. But yeah.
Yeah. I know a lot of people that was like putting on like short OP, long OP, short
The ARB.
ARB.
The
Yeah,
ARB OP. Yeah. That one.
and
That
like
one
my
makes a lot of sense
favorite.
also.
Yeah, my favorite is long ETH, short AVAX.
I
That's my
mean,
favorite.
long ETH short any DeFi has been probably like one direction, right?
Or like just like
Like a lot of
any
these spread trades and
VCL
like
ones, right?
yeah. Well, like a lot of these opportunities, like especially in like choppy regime. I mean, we talked about this earlier, right?
Yeah.
Like it's a supply demand kind of imbalance thing, right? Increasing supply versus fully diluted supply. It's just like it's unless you got new bids, which you don't, like it's gonna go one direction. Just don't get liquidated. So like don't use like insane leverage, right?
Yeah. So like how do you think about like leverage? Like do you ever use leverage? Like how do you think about position sizing for like, for example, Maker, Canto, dYdX, Sol? Like how do you position what's your sizing there? Like how much cash do you own? Like, how do you retain optionality?
I think it more depends on events. Like for the dYdX thing, like if it goes lower, I'm buying more, right? So like I'm not full size in dYdX. Like we have a piece, we have VC, we have liquid, but like any lower is more yield, which is but Maker ETH, for instance, like full size instantly when the burn got ignited, right? Like that was already fully diluted. And they're just like the meme, the government is buying from you, right? Like
Yeah.
you want me to say, like, yeah, why would I not? Who am I waiting for? Right?
Okay. So I guess it depends on
like it's more nuanced. It depends on like specific catalysts and stuff. Like unlocks and stuff. Like they do matter. I'm not saying they don't.
Yeah, I agree. Yeah. I'm like fully sized on
like holistic, I think. Like you can't say with 100% that like everything gets unlocked and don't. You can't say with 0% that it does, right? So like wherever you are in the probabilistic spectrum, that's how much you should size based on like your total like holdings, right?
Yeah. And like back to the first question, like around leverage, like when do you use leverage? Like if you ever use leverage?
I mean, I don't use leverage that much, to be honest. Like when the coins go like 50, 100%, like you just need to stay in the game long enough to be right. If you actually have edge, you just increase N, right? But like when spreading is like a good way to use leverage, right? Again, Maker ETH. If you're sure you're right, why not just make more and put on more? But in general, I don't use that much leverage. I would say a lot. Yeah, I would say compared to other people, I probably don't use that much leverage.
Yeah, crypto markets are so volatile. Like I've only used leverage like twice, and that was like during the bull market.
No, like again, like it's just like when I'm like very convinced that like everything aligns and the catalyst is here, and like oh my god, like yeah, fine. But like apart from that, not really. Like maybe like spreading to get to like a specific delta that I want, but like that's very different.
Okay, so we're 40 minutes in. Let me just ask you some general questions as we wrap things up. So, do you have any like advice or tips for my audience when trading liquid markets? Like, what are some of the most common mistakes people make in crypto? And those two questions are kind of related. So,
Yeah, I think maybe just honing your own style. What works for some people doesn't work for others, especially the time frame, right? Like some people could be really short, in out, made money, whereas you're still holding the bag, right? Like just people trade on different time horizons, so it's very important to understand that. And then like everyone always asks like entry, take profit, and stuff like that. And like
yeah,
I don't really like to give like entry and exits and take profits because again, it's like it changes a lot. Like you should be consistently reevaluating your position, and everything should be probabilistic, and you should take profit as you run up. Like let's say like your maker E target is like 1 or 2, right? That shouldn't be your full take profit. You should be taking profit up to there. And if it goes lower, you should be buying more. Like unless something fundamental has changed or your thesis has changed, right? I think people are too like, I have one buy level, I have one sell level. No, it should like think in a more probabilistic framework. If like you think like 0.5 maker ETH was cheap, spray that thing down to 0.3. If you don't get fill, you don't get fill. If you get fill, you got better prices. If you think 1 is a take profit, all right, sell up to 1. Maybe like go from like 0.8 to 1.2 or something, right? Like catching the top and bottom is like ridiculously hard, right? It's like in the middle where like the meetup is made. So like you can't catch the top and bottom, like spread, right?
Yeah. That makes sense. And this is more of a fun question. I feel like as I scroll social media, there's a lot of bear market PTSD. Like how do you get over bear market PTSD? There's a lot.
Today is rough, dude.
Yeah, it's crypto's tough,
The bear market PTSD. I mean, I try to stay off social media more, to be honest. Twitter is a pretty big like echo chamber of like, yeah, like the fad of the day, or like everyone's showing the same shit. Like,
it's like Stars Arena. That was crazy.
Yeah, like Stars Arena. Like, I don't know, like formulate your own ideas, your own hypothesis, and then like of course like ask other people what they think about it, right? But like in the initial stages, like you gotta do your own work.
Yeah.
If you copy some other people, like yeah, you're just gonna be susceptible to everyone's moods and emotions.
Yeah, and if you copy other people, it's like, because for example, like I make content and like, I have my own time horizons. Like my risk tolerance is crazy. It's like people often tell me like you're crazy. Like how do you own so much Maker? And like how did you buy so much Canto, for example? And I'm like, oh, like bet bigger. I don't know. It's like for me, like I see, like like you mentioned earlier, like you Maker ETH, right? Okay, like it makes sense to like just go full size initially, like earlier on, because the buybacks is like one-way structural inflows that should increase
because
the Maker
diluted. I guess the only thing you had was the AZ16 selling, which you didn't even know at the time, right? So like
yeah, and then like Canto has like short-term catalysts. So if I believe in the thesis, then like I might as well like the size ahead of the catalyst, and if it plays out, then I'm positioned well. If it doesn't, then I know exactly when to cut. So even if I lose a bunch of money, it's like I'm not going to have any regrets. Like I still think it's a pretty good trade with like a bunch of like asymmetric upside. Yeah. I forgot what we were talking about, but yeah, like bear market PTSD, right? I guess.
Yeah, bear market PTSD. Yeah, my advice. I mean, maybe it's not good advice. My advice is just stay off like people fighting over Stars Arena, and shitpost more memes probably.
Yeah. Do you ever?
I don't know, like touch grass. I don't know.
Yeah, touching grass. Do you ever like use sentiment as like an indicator? Like, because for me, it's like me personally, like I tweet, or like my job is content, right? So like I tweet a bunch of like certain types of content, and then I get feedback, and then I'm like, okay, like that's interesting. For example, like I will post a bunch about like RWAs, and like most of my comments is like it's a scam, and I just feel like, oh, like we're still early. And like that's like one way I think about sentiment and like getting, I don't know, like more subjective data online. Like, do you ever use sentiment as like an indicator, or is it more like
I would say not
hindsight
like
thing?
that, but like there are people who like will like message me from like just like people who not in the crypto space, and they're like, what do you think about this? And there'll be like some like garbage tier like shitcoin that I've like never even heard of, like guaranteed rug. And I'm like, all right, like it's getting frothy, right?
Yeah, you're a top signal kind of thing, right? Like,
Yeah,
your
like they're
friends.
just like stuff like that. Or like people who are like, yo, Luna, like, and just like put my life savings in it. Like, yeah, what could go wrong kind of thing. I'm just like, okay, but like you studied, you're in like, you're not in like economics. Like, you don't know anything about this. Like,
Yeah.
okay, how did you hear about this? And then it just like, yeah, or like some of my friends are like, yo, I just got like shown this like deal, like 5 million, seed round investment, 50 million, fully diluted. I'm like, dude, you're like the far you're like in P, like, how did you hear about this random shitcoin? Like, no, right? Like,
Yeah.
if it's coming to you, like, there's an issue. Like, why
There's like
am
no
I
one else
telling
wanted
people?
it, right?
Yeah. So it's just like, there's like more of that sentiment, but like, I do look at like Google Trends and stuff to see like retail search interest, to see like maybe like what cycle or like what inning of the cycle we're in and stuff. So like there's like two ways to do it, but less of the consensus, non-consensus thing that you're saying. But like, I mean, yeah, there are some coins which are like very hated, but you can tell that from the charts.
That's fair. That's fair. Last few questions. If you had to denominate your wealth in a crypto asset, stable coins are, like that. That's fair too. Like, what would it be?
Bitcoin.
Bitcoin.
I mean, the thesis always remains, and the reason why I'm like so like honestly like someone like all this tech stuff is like it's just a call option. Like the real answer and like why I like so fully believe in the space is like because of Bitcoin. Like I believe it is a good like store of value in terms of USD debasement. Like they just inflate and print our money. And like, yeah, you could use gold. Like ever since we were off, so my background is like econ major. So like ever since we were off like Bretton Woods, like you can just look at gold price, right? Like it's up like 99% since like we were off the gold standard, up 95 since like 2020, right? It's like it's a one-way trade. Like they just mint more dollars. Gold inflates at like 1-2%. So again, it's a supply and demand issue. Like okay, like even like they just like gold is inflating at 2%, your dollar's inflating at 5, 10, 20, right? Like it's a one-way trade. You know how much Bitcoin is inflating at. Like maybe like there's like individual like smaller like price movements, but the overall trend is very clear. So yeah, I would choose Bitcoin.
Gotcha. Bitcoin over ETH.
Yeah, I mean, yes. Like if I like died in a coma and like woke up like or not died, but like in a coma, woke up like 10 years later, yeah, I would choose Bitcoin over ETH. Like as a trader, like yo, I'm changing that shit like every other right? But
Yeah.
like
No, I
yeah,
feel
it's
you.
not like one holding asset, right? Like yeah, without a doubt.
Got it. Final question. I know I have to get going soon. But when next bull market, and like what's like the catalyst, you think? Is the halving, like everyone thinks the
What?
halving. Is it as simple as that, or do
So
you have like a more
usually,
nuanced view?
like historically, like I was like you can just look at like historical like regimes, right? It's not initially the happening. It's like 100 or so days after the happening, right? So like you line up like the happening with like a Bitcoin ETF, that'd be really nice for inflows. And I don't think that would be like that much initially, but again, it'll depend on the market and the regime. But like over time, it's like very bullish to be able to buy 401ks, to be able to buy Bitcoin with your 401k and stuff without getting like destroyed by fees. And then the election would be nice. I mean, yeah, just no Garrett Gensler would be very nice. So those are three potential catalysts. And like again, I like those are three potential very good like Bitcoin catalysts initially. So like that aligns with my thesis of like the Bitcoin ratio needs to go higher. That there needs to be more like washout for some of these. alts for us to like cycle back up.
Gotcha. But you expect Bitcoin dominance to go up, but you still think you have enough edge in the altcoin space to size bets, basically. Is that how you view it?
Yes, you can spread. I mean, I actually think it's easy. Like, if you're forced to spread, like, the ones that perform better are very clear, and the ones that perform worse are very clear. That wasn't the case in the bull market, where like the shittiest of shitcoins just ran hard as fuck based on like certain economic incentives, certain shilling, right? Stuff like that.
Got it.
But in general, like, yes, most alts are going down.
Sounds good. All right, well, anyways, thank you, Eric, for your time. I know you have to get going in a few minutes. Where can people find you? Your socials, etc.
Yeah, you can follow my Twitter. It's at CMSPerry, and then we also have a blog. I think it's Substack. I think it's CMSHoldings.substack.com. I think. Yeah. To be honest, I don't really post that much though. It's mainly just memes. So yeah.
All right. All right, cool. Yeah, like maybe in a few months, maybe when Endgame is happening, I'll have you on again for part 2, and we'll be euphoric, and maybe you'll have your shirt by then.
Maybe I'll finally have my shirt. Yeah. It's looking very unlikely. I'm probably fine, to be honest.
Yeah.
The in real life double rug is something I've never experienced before, but that would be
a double rug.
I've been rugged 3 times on a crypto project though, so like it's not the worst.
Yeah. It's losing $20 on a shirt.
There's this one project called Cover. I don't know if you remember that.
No, that sounds so familiar.
3 times about the same fucking project. I was like, dude, what the fuck?
Was that some insurance project?
It was like, it's called Safe. It was like Andre.
And
yeah. He's like talent dude who like dropped out of college, but then I don't really know. He said he was like quitting and he was like having like emotional distress or something, and like rugged it like 3 different times. And I was like, oh, that was the worst one. So twice wouldn't even be that bad, to be honest.
All right. Well, thank you, Eric, and hope you guys enjoyed the podcast. Bye-bye.
Yes, hopefully this episode 1 was up to par.
Yeah.
All right. Peace, yo.
Okay.